Welcome to TradeTheMBA.com. This is Jonas Reports for the 22nd. Well, we still keep getting our dramatic little pushback presses and falling liquidity and then major spikes. It's all exciting action, really. We've been in kind of a soft spot prior to this, and then we started to have the first glimmer that potentially there was going to be a turnaround, but we couldn't quite get the commitment from midterm buyer concept and that, and we started to end up with what I would call kind of a sketchy shakeout here, where it was just sort of like unable to form and start making a complete run, which is why we've been kind of like paused. We ended up with our break signal that took place there because we weren't getting a crossover, and then we ended up with a little bit more of a breakdown. We ended up moving all the way back up to the resistance of the ABM yellow, and then dropping all the way back down to the 76% Fibonacci line here, and then post-market traded actually significantly below that level, which was also bought up in between because, again, despite gravity, you have the Fed, and the Fed has their own anti-gravitational device, which is unlimited money, and it works very well. NASDAQ not suffering nearly as much, just came back, touched the ABM yellow. Still within, not exactly what you would call an ideal configuration, but the shakeout for it, you can see much cleaner than the S&P. So this is an indication that, the tech industry is still the viability of the market, because everything else now with the potential resurgence, now we have global conflict, we got Libya heating up, you got China, India, the re-election campaigns are beginning. You've got more continued violence because of no policing taking place in a lot of big cities that's allowing for destruction that really causes people to pull back from spending, which ultimately is what will keep the economy moving. And that's really the stress point right now at this particular stage. So we currently are looking at Euro setup in this particular case, rebounding off the 61% slightly. That's just a little softness. It's completely reset, but it's still somewhat soft. There's a little further to go from a reset standpoint, all the way back down to the 110. They're going to keep holding it around for a while, I would imagine, just because they can. And also from an oil standpoint, still again looking for it to break out from this high. Once it does, the 50 should be pretty straightforward. The problem with that is, on the reverse side, it creates an inflationary pressure. The fact that gold is making that move that we talked about towards breaking out of its range, when that happens, it's going to be simultaneous with oil. And that will be the triggering point, which will then really become interesting, because what does the Fed do at that point? Because right now you can print free money because there's no interest attached to it. So that works for a while, but if that changes, oh my gosh, I can't even imagine what the interest payments on that will be when it takes place. So interesting. There's going to be some dynamics. I don't know how you fix some of those things without literally wiping out some of that debt, or you certainly can't raise taxes because there's nobody else to pay them. From an intraday, we popped up and really pressed well into new territory, getting all the way up into that 3140 right here. We ended up at the 3128, which is a good point that from that positive extreme to add in a new level, just because it gives us some spacing between the previous one, and it was the start of this move right down here. Just add them all on right there, it is. And it didn't last long. I mean, came across through, we ended up with the breakdown. It was a pretty good run from the power mode, kept everything above, cyan under, red DOC, with full DOC steel reset. It still took a while, even before, with the power mode broke down first. It wasn't until the crossover here that it signaled the short, and that's when that really took place and just kept going. I mean, it just didn't provide any liquidity for buying, and you stayed negative 13 for a big chunk of that DOC red. Going through there. Once you get below the 31, 27, 3109 became the next one, and then when that one broke, you knew it was a long run down. We had 3075 in that range coming down below, and that's exactly right in these two little algos where we started to catch a little bit of the bid. And then it broke down towards the end of the day after popping back up towards 3109 again. And you can see how that works. And then boom, and once it broke again, the 3075, 3050, that left 3013. The fact that right after that, they kept pushing those highs. So it's kind of critical to get it back up over that 3050, and that was enough to give it a bid here into the pre-market, which has brought it all the way back up to the previous day's ranges. So pretty dramatic final, few hours that really create some just fantastic volatility. I mean, this is what I said. Everyone was talking about, well, at least a lot of business people. Oh, it's going to get quiet for the summer. No. They couldn't see what we were building up within some of these setups was pretty dramatic, and I think it's going to continue to stay so. So I think that's just bodes well for really being able to trade some of these range moves effectively. Now, the problem a lot of people will have is those that are buying into this from a long or a short side and then putting a stop. They're getting killed because the ranges are just too much for that, and they're designed to wipe that all out, and very effective because that's what picks up the extra liquidity on a lot of these moves as you get one side or the other mismatched in, and they take advantage of anyone who's what we would call a weak hand, just someone who's not able to have their direction and stay with it. As always, though, I will update any new things on the Skype chat. Trade well.